Good morning, ARMR Insiders. Good morning, Vietnam. Welcome to Stock Market Investing with the ARMR Report on a day where the market's dropping about 1.5% at the open. That's the NASDAQ. We're down about 2% on small caps, maybe 1.33% on the S&P. So let's go over how we're getting our day set, what the ARMR action plan is, how we deal with days like this, the good, the bad, and the ugly. Before I dive into it, don't forget the ARMR Report. Our job is to get on the right side of probabilities over and over when reward's worth risk. It's not an absolute. This is how I run my own personal capital. Okay. So it's a guide to help you navigate. That's what I'm trying to do here. And it's a three-stage process. We build our whiteboard, we do our research. That's where we, get our ducks in a row when we're getting ready to buy things. We use our algorithms to tell us when to add risk and take risk off. We'll get to that in a minute. And we use our stop losses to protect ourselves. So I don't know your risk tolerance, right? I don't know your goals. I can't tell you exactly how to run your portfolio. I can just share with you my experience, and over time, I hope it helps. So where are we right now at the ARMR Report? We're in a cash position. We've been in a cash position. In fact, at the close yesterday, we had the most amount of cash in our portfolio that we've had for weeks. That was simply a function of booking profits at targets, taking some positions out that had hit stops, and not putting the money back to work until one of three or two of three or three of three things happened. And I've been talking about this for the last, week or so. I said, first of all, risk monitor. So, if we look at the risk monitor right here, okay, and we click in there and we, drill down on the 6th, we change that to risk monitor yellow, okay? So you can see the changes. Risk monitor yellow doesn't mean we sell everything. It means we're in a managed success mode. We're not in a managed risk mode where we're getting risk off, going to cash everywhere. We may be at the end of today, but we're not there. We were risk monitor yellow because what we were saying was when we're hitting targets and booking profits, when we're raising stops, when we're using trailed stops, we're protecting assets. Okay. And so we're in that process in the market and we're building up a cash position, waiting for really one of three things. The call wall on the S&P to roll higher. It rolled higher to 4,400. Remember that? But yesterday we talked about how it came back down to 4,350. So the call wall was not rolling higher. So then we said, well, we need to see the small cap index confirm the big caps that were making all-time new highs. So while the S&P and the NASDAQ making all-time new highs, the small caps were underperforming. Okay. And so let's take a peek at what I'm talking about. This was the biggest issue. Okay. Small caps had yet to make a new high. Okay. And so what we said was, well, if small caps can't make a new high, that's always the canary in the coal mine. Investing is upside down pyramid, I always say, right? So the biggest amount of capital is at the top, and that large amount of capital buys large cap stocks. Right? Smallest amount of capital is at the bottom of the pyramid, and it buys small cap stocks. So there's relatively less support for the small cap index. So it's always the canary for me. And so one reason we're carrying the largest cash position we've had for weeks is that we're seeing that canary struggle to breathe. And that gives me a pause. And wait a minute, I don't want to keep putting my cash back to work. I don't want to have any margin in my account when the small caps are doing that, because we just never know when right around the corner, there's an air pocket. And that brings up the third possibility of when will we put that cash back to work? If the S&P challenges the put wall, that will give us an opportunity to put the cash back to work. So largest cash position, no margin, waiting for one of those three scenarios to play out. We're getting a challenge of the put wall this morning. here it is. It doesn't feel good, right? So we traded puts yesterday, made money on puts on the indexes. Absolutely wish I held them overnight, right? I don't know when the market's going to drop 1.5% overnight. We could have. Didn't happen. We made some money on puts. We might trade puts again this morning. We might be trading calls down here at the put wall on the indexes. All right. So on the one hand, what we've been asking for is a challenge of the put wall, because that is usually a great opportunity to buy stocks in the market. But it doesn't feel good when it's happening first thing in the morning. So what's the action plan? The ARMR action plan for this morning. How do I handle a morning like this? First of all, this is a classic day to turn off your computer and stop staring at your P&L. Do whatever you have to do to not look at the P&L first thing in the morning. It's going to be horrific unless you're, a huge cash position. I mean, I've got cash, but I don't have enough, right? I mean, never enough when the market's down 2% at the open, right? So what you don't want to do is stare at your P&L. What you don't want to do is think about what could have been yesterday. Okay? Because none of those thoughts help you manage your portfolio today. So you got to put that aside. Okay? And you got to say, how do I get on the highest probability side of what's happening now? So what I'm going to share with you is probabilities. It's not an absolute. This could definitely be the time the whole market collapses 10% in an hour and nothing I can do about it. Okay. So I can't manage money worried about the 1 in 1,000, 1 in a million type of mornings. That's how your mind works, though. Fear starts to eat away at you, and so you start thinking, oh my God, this is the end. Let me give you some thoughts. Statistically speaking, a mechanical bull market doesn't end in one day and just implode. It will set up a top, okay? There'll be a series of challenges of the top that fail, and then you get the implosion, right? So just an unbelievable whack down to the put wall is usually it's a part of a bull market. It's a shaking out of the weak holders, and the market moves higher again. We have a lot of action on the call wall all the way up at 4,350, 4,300. So as we drop below it, there's a natural pull back up towards that level. Okay? So these are just thoughts off the top of my head on days like this. We don't execute first thing in the morning. I don't care what's happening. I don't execute first thing in the morning. I don't sell into a panic. I generally wait till 11:30. You all know this, but I'm just sharing it with you. Statistically speaking, this is probabilities now, right? So there could be 2 times out of 10 where this doesn't work. Today could be that day. It'll be ugly. Nothing I could do about it. I manage my portfolio on the right side of probabilities. And what I'm saying is, and ARMR insiders have been doing this with me for a long time, you've witnessed the probabilities play out. It's almost always best to wait till 11:30 before I start reducing my exposure to the stock market. And what I do is I use the low of the first 2 hours as my line in the sand. And I let it trade the rest of the day, but if it takes out the low of the first 2 hours, I start taking positions out of the portfolio. It's very hard to do that on a morning like this. The desire to dump everything that is even remotely in your periphery, you just feel like doing it. Don't let me stop you. Do what you have to do. Execute at a level that makes you comfortable, okay? So I'm just sharing with you what I'm going to be doing. I don't execute first thing in the morning. I won't execute probably until 11:30. Sometimes I succumb to the desire to reduce my exposure. It's okay. It's okay. If I do succumb before 11:30, at the very least, I wait till 10:30. So I let the market trade for an hour to see what I'm dealing with. I usually regret it. If I sell something at 10:30. Okay. But I may. Okay. There may be some things on the periphery, not my core positions, but things that I was looking to sell anyway. And I say, okay, that's enough. I'll take this off the table. I'll stop this loss, whatever. But I'll usually step back and I'll wait for an hour. There's nothing wrong with shaving positions down. It doesn't have to be an all or nothing decision. If you feel that desire to reduce, take a piece off. See where you are in an hour. If it feels right, reduce it again. Okay? So these are different ways to do it. But the ARMR action plan, I will do nothing for at least the first hour, hopefully 2 hours. Okay? There'll be no buying of anything new. I'm not trying to jump in there first thing this morning and buy a reversal back above the put wall. Okay? Vicious sell-offs like this, just like tops in the market, they usually test. And so what I'll be looking for, vicious sell-off, rally. And by the way, if I'm going to sell anything, it'll be on that first rally back to the armrVWAP. So if I sell something before 11:30, what I generally do is market will cascade lower, it'll trade, it'll run up to test the VWAP. If that test fails, I might sell some things. Okay, I might reduce some of my periphery ideas. I don't know what time in the morning that'll be. We'll have to see. Okay, but boom, runs up. If it fails at the VWAP, then the second wave down could get ugly. And so I might carve some things out of the portfolio at that VWAP failure. Okay. What I won't do is look to put my cash to work in the first couple hours of the morning because I'm challenging the put wall. Okay. So what I'll look for is a rally up, probably a failure because these things usually rally and then they roll over and test the lows. And if we get a double bottom setup over an hour, 2 hour period later in the day, then I might look to put some money to work. I'll say, yep, looks like the bottom's in here. The put wall is going to hold. We just got a nice reversal signal after a 2 hour bottom. Okay, maybe I'll put some money to work. So this morning, I'll be working on getting my ducks in a row. What stocks do I want to own if that scenario plays out? Okay, so those are my thoughts for this morning. I'm not going to go over what's my list of top ideas I'd like to buy because honestly, I don't even want to think that way right now. We are in managed success mode, could be managed risk. We could be raising a lot of cash by the end of the day. All right. So I'm not going to go over here the stocks I'd love to own. We'll do that later during the in-game update at 2:30. And maybe I do that in-game update earlier, depending on what the market's doing. I might come on, share with you guys. So monitor the Slack room because I might say, hey, let's do this at 1:30. I've got some things to talk about. But probably 2:30. And what I'll do is come on and say, look, here's the list of stocks I want to own. That was a great test of the put wall. Market's rallying, hopefully, and maybe we put some money to work. Okay. I don't feel the urge though to put money to work in the midst of the mayhem. I may end up putting money to work Friday. Let it all shake out today. Put some capital to work tomorrow. So my general feeling right now is to manage the positions we have left. Be happy that I have a cash position. Don't beat yourself up because maybe it should be a bigger cash position or whatever. You should have a cash position. Great. So you have some opportunities if you put some money to work. And really, I'm just going to let the mayhem play out and then see what happens when the dust settles about how I want to adjust the portfolio going forward. All right. Any questions you have for me? Let's go. Not a lot of questions. Great. Right. I mean, there shouldn't be a lot of questions. You guys who are watching as we do this live, you've been with me for a long time. So we all, we've seen these days before. We know how to behave. So we're just going to execute our strategy. Okay. And right now I'm going to go turn off the P&L. I don't want to look at the P&L. I'm going to do it right now. Do it with me. Do it with me. Go ahead. Look at a portfolio that's not, do something with your screen that doesn't show you your P&L. All right. And then just execute your strategy as you go. Rob says, CNBC says they have no idea what caused the sell-off. I'm not sure that's who knows what that really means. That kind of makes me more uncomfortable than anything else, be honest with you, Rob. Usually when they come up with some ridiculous reason, it's the confusion over what the reason is that's concerning. And this does, Rob, bring up a thought that we've been talking about in the Slack desk and in other live calls like this. We looked at this. Okay, first of all, we knew that small caps were telling us something might be a little bit wrong because they were failing. But we looked at treasuries the other day. Oops. And we talked about what is going on with this rally. The last time treasuries rallied like this and yields collapsed, was a pandemic. So what's happening now? Is this just a run back up to the, downward sloping 200-day moving averages or something more nefarious at foot? I still don't know the answer to that, and I put out, I was just joking when I said treasuries are doing this and the best stocks in our portfolio are all of the cybersecurity stocks. I mean, maybe there's something really nasty going on out there with ransomware of something we don't know about yet. I don't think that's the case. I just threw that out there really as amusing, but it is interesting that treasuries are doing this, and I'm not really sure what it means. I've read some places that people are afraid that growth isn't coming back like it should, blah, blah, blah. If that's true, then all the stocks we own are going to benefit from this when the dust settles, because what we basically own are innovators and big cap tech, and those stocks lead when yields are going down. This is why we've avoided banks. This is why we've avoided industrials right now, right? So if we're getting rates going up, and if it's because the growth trajectory around the world is slower than people thought, I'm not saying that's the reason, but let's just pretend that's what it is, then our portfolio should have a real nice recovery by the end of the day. And this is why we've been focusing on big cap stocks, big cap tech stocks. I don't, from the conversations I've had with some of you who follow me on Twitter, maybe you don't understand what I'm saying, so let me try to make it clearer. We've been focusing on big cap tech stocks to protect ourselves. So when the market's imploding, we have liquidity so we can exit if we have to, right? Small cap stocks with the small cap index breaking down are getting destroyed this morning. So if you have a portfolio full of those names, it's an even uglier day. Okay, so money was being funneled into the big cap tech stocks. That's where the alpha was. That's where ARMR portfolios are overexposed. So market collapses in the morning, we're going to lose some money. But the majority of our capital is where? It's cash, it's Amazon, Apple, Salesforce.com, big cap names, right? And so it affords us the ability to be patient, to be calm this morning, because we don't have a portfolio full of small cap names that are dropping 5 to 10% at the open. That's why we're doing that here. All right. All right. I think that's it for this morning. I wish you all the best of luck today. Okay. Take a deep breath, sit back, take a deep breath. Turn off the P&L, just execute your strategy. You'll be okay. All right. I'll talk to you guys at 2:30. And of course, I'll see you all in the Slack room. Take care, everybody.